Thank you, everybody, for joining us back here at 3IQ's channel. We're sitting here once again with Mr. Mark Connors, the head of research at 3IQ. And Mark, I haven't seen you all year. How are you holding up over there?
That was pretty good, Michael. We have not talked all year, and it really wouldn't be the start of a year unless we did that joke and laughed inside at least.
Yes, it's a classic dad joke in my opinion, but kind of talking about we're in a brand new year, and I think it's important to kind of take this time, look back at 2022, look at all the lessons we've learned there, and kind of use that to apply and try to think of what 2023 is going to have in store for us. So kind of kicking off, we learned a lot of very, very hard lessons in 2022. Can you kind of walk us through the key examples in your opinion?
Sure. There are what do you want to call it? First principles, whether you want to look at the Bitcoin maxi or the decentralized degens, whether it's not your keys, not your coins, or the code is law from the decentralized folks. All those proved out. I think what we found out is along the lines of flying too close to the sun, which is being maybe generous or beneficent. Is a kind way of looking at how some folks played.
Mm-hmm.
We found out that some folks presented as integrity and it wasn't. Let's just look at the decentralized, unregulated players like Celsius and FTX, the poster children for what went wrong in 2022 in digital assets. There were misrepresentations at a minimum. So while we would like to and hope to find that there was a way to produce a traditional asset-like plumbing system in digital assets, we found out that maybe it'll take a bit longer to do. Some folks did it too fast and they broke. So the lessons learned were that protocols worked and some of the plumbers failed. That's what we found.
Yeah, fair enough. And I mean, there was plenty to go around. I think another big one last year was the Terra Luna crash, that whole fiasco as well. But there's lots of lessons to be learned when it comes to the whole TradFi versus DeFi kind of argument. A lot of these companies, even though they were working with blockchain, were very much in that traditional finance place, just unregulated. And as you said, the decentralized protocols themselves worked well. I think it was largely a lack of people understanding what was going on, and these companies were black boxes, so to speak.
Yeah. And, when we were talking a little bit before we got on the air and mentioning Terra Luna, first of all, let's touch on that later, because that's a great example about masking, the kind of the wolf in sheep's clothing, a centralized player pretending to be a decentralized protocol. But back to Celsius, when everything was going down in Q2 and margin calls were being made on levered players, and some of the lenders like Celsius had to recall collateral or were having collateral recalled, they repaid on the decentralized exchanges first. Those over collateralized loans were paid off first, or they would have lost their collateral. So the integrity of the DEXs and centralized platforms bore out. I mean, they get an A+ beyond a pass. And then Machinsky and others would go back and try to, hold off the folks that have a claim on their assets that they owed money to, uncollateralized loans. And those are the ones that still have a hole in them. So I think that's the least reported dynamic in the general press. And I'll stop there, but I also, besides Terra Luna, this brings up the fact that in some of the FTX hearings that we saw in December, idea about people being lost on people about the DEXs performing, some of the testimony in the FTX aftermath was just people misunderstanding the protocols, code, Bitcoin, et cetera. There were misstatements made by quote professionals in front of Congress. So still a lot of education to be had, Michael. I think that's also what we learned in 2022.
Yeah, fair enough. And I guess from there, with those harsh lessons comes important things that we have learned for 2023. So as we're going into 2023, it's a proverbial clean slate. We have a lot on board. So what do you think is in store for this year?
Go back to learnings and education. We already have insights from some of the bankruptcies. Last week, um, the judge in the Celsius bankruptcy case found that the deposits by the earners or by depositors are not their property, but due to the terms of service, again, the contractual obligation of the depositor, they surrendered their assets to the corporate entity. So
Mhm.
now all those deposits are wards or claims of the estate, and they'll be general unsecured creditors. So they go to the back of the line. Not what they wanted to hear, but that's not a surprise if you read the terms of service. The good news is now that we have precedent and we can have more clarity about the relationship of digital assets on custodians, exchanges, et cetera.
Yeah, fair enough. We've cleaned house, so to speak, for the new year. And again, unfortunately, we have to learn a lot of things the hard way. We've repeated our mistakes all the way back from Mount Gox to now many times. It's hard to get past human greed, but so far the decentralized entities in the space are very promising. And there's a lot that we're going into 2023 with that should be good little kernels of wisdom to help make better decisions.
Absolutely. But I guess some folks want to have clarity and specifics. So I would say that digital assets, from a valuation standpoint, still below the 200-week moving average on Bitcoin, Ethereum, proving out with a very solid dominance ratio to Bitcoin at 0.07, bearing out for the majority of the year, despite all the volatility. It's the first time you've had Ethereum persistence in a crypto winter. There haven't been many for Ethereum, arguably, but in a down market, it's really held its own. So I think Ethereum gets MVP really for performing on the merge and for holding up. I think it really performed beyond expectation in this market. So that's one point. And the second point is that when you are looking at all asset classes, I think you have to consider the difference that digital assets went through a default cycle. And that's always a good time to look and invest.
Mhm.
The poor assets and protocols were culled. It remained, only the stronger remain. It doesn't mean that everyone is of the same caliber, but it's a much better entry point to start your investment process. We don't have that in traditional assets. Corporates have not gone through the default cycle. Multiples have come down in equities, but they're not down to those trough levels we saw in 08 or 2000. In 2002, 3. So still some wood to chop there.
Yeah, well, here's the hoping that markets as a whole will be better for 2023. But once again, everyone, thank you for joining us here today. Mark, thank you so much for coming on and sharing your insight. And if anyone has any questions, don't be afraid to send them over. Closing words from you, Mark, before we go.
Same thing as always, do your work. Please hit our website, understand, get context for digital assets. We think it's the right place to be, but the volatility is the price you pay, and you better be eyes wide open as you enter the arena, because you'll be tested for sure.
You guys heard the gentleman. Do your own research, and happy 2023.
Great. Thanks, Michael.